whole lot of people still logging on. And if you're able to look at the participant screen, you'll see the numbers increasing. So we will hold fire for another minute or so and then get started. This event is being live broadcast on YouTube. If for some reason you'd rather watch it on YouTube, for example, if there are problems with access to Zoom in your organization, but YouTube's easier, you can simply search for Climate Bonds Initiative EU Taxonomy in YouTube and you'll find it. So Julia and Helena, thanks for your patience. Give us a couple of minutes till everyone dives in. We are, of course, free to chat about anything we like, including lockdowns and COVID, before the thing formally starts. But we'll just wait till more people are online before we formally start.
Did you all bring a cup of coffee?
No.
Funnily enough, I did.
Oh, it's well prepared here, it seems.
I have my tea.
And today I'm trying tea as well for a change. So, Julia, I hope you've got someone you can shout to in the other side of the room to get you one halfway through when it becomes necessary.
I don't think it will. And I will have an ice cream afterwards as a treat.
No, that sounds good. All right. We're about to reach the 700 registrations online. You will see, everyone, that there is a Q&A function. In fact, we've got our first Q&A comment, Helena. Thomas Conde Salazar has put in, "We love you guys. Thanks for all of this. Vamos, Helena." Thank you, Thomas. We appreciate that.
I recognize people, then hi, I should say hi to, or hola to Tomás, and also to Patrick Bader, who I also saw that it was has joined us, a former colleague of mine.
That's great. So there are many friends on the call. There are, of course, also many people who haven't had a chance to be involved in these discussions afterwards. The format of this is not a lecture. This is a conversational format where Helena, Julia and I are going to have a talk about the impact for investors and what it means for investors in terms of the EU taxonomy. We have had a first webinar last week that Thomas intimated. Helena and I talked about the introduction to the taxonomy. That webinar is available as a recording on YouTube or on climatebonds.net under webinars. Please have a look. It's an hour and a quarter long. And Julia was very kind enough to say a few minutes ago that she thought it was a good webinar. So I'm going to recommend it to you. This one is focused on investors. Next week, we will have a discussion focused on corporates. We will have as a guest Isabelle Lampert from SPIE in France, who'll be talking with Nadia Humphreys, our co-rapporteur. That's unless she gets swamped because Bloomberg's launching something. We don't know what, it's all secret. So Helena may have to step in if the worst comes to worst, but I can tell you, Isabelle has confirmed that she'll be available. For those of you that are tracking social media, mea culpa, I made some errors last week. I put up the wrong social media. So if you're coming here expecting listening to Isabelle Lampert, that was my mistake. I fixed it eventually. Isabelle's next week. Instead, we've got the wonderful, the extraordinary Julia Bachmann, who's the EU head of business legal at Allianz Global Investors and has been working in the taxonomy to see change happening. Of course, we've got Helena Viñes Fiestas, who's now at Spain's National Securities Market Commission, CNMV, and she's also the EU platform co-rapporteur for the Usability and Data Working Group and has been a colleague with me for many years on the technical expert group, many years now, Helena, can you believe it, working on this particular issue. I'm Sean Kidney, the CEO of the Climate Bonds Initiative, and also with my colleagues here, working on the EU platform on sustainable finance. You will see on the slide available, if you've got access to the image at the moment, on the side, the next events. Next week, same time, on the same day of the week, what it means for corporations with, as I mentioned, Isabel Lomper joining us. The week after, we have a 2-hour session, presentation on the proposed social taxonomy on the Monday, and on the Tuesday, presentation about the significantly harmful and no significant impact taxonomies. These are important pronouncements from the EU platform about the framework to go ahead in those 2 areas. Then we come back to usability and data on the 19th of July with what it means for banks, and we will have as our guest Gwen Yu from BNP Paribas, who will talk about it from a bank's perspective. But today, what it means for investors. So Helena, can I ask you to just kick us off from your perspective, someone who was recently working for an investor, of course, and now working for a regulator. How would you describe the key things that people need to know about in the taxonomy in terms of impact on investors?
Yes. So the first thing, and good morning, or good afternoon, sorry, to everyone. I think the first thing that investors should have in mind is that while the only obligation linked to the taxonomy for investors is one of reporting, actually, as it tends to be, reporting is the means towards an end. And what are those ends? And I would say that the end is actually threefold. The first one is to provide real clarity across the investment value chain on green financial products. The second one, more interesting if you wish, is to influence decision making, and I will come back to that. And the third one is to really incentivize the investment on green financial products and those who actually are invested in green activities. And we can start deconstructing those 3 points if you wish, Sean. But let me start with the clarity, providing it's a tool to provide clarity. What do we mean by that? So basically it is what until now, investors have been using their own taxonomies or a market-based taxonomy to define what is green. In a way, if you wish, we were in a sort of abnormal situation where companies and investors were deciding not only what it was green, but how green they were. And now we have an official description, if you wish. We have an official reference, So what that means is that it allows for comparability, And for the first time, end investors are going to compare apples to apples. Even more interesting, because the taxonomy requires companies to disclose the percentage of the revenues and capex that are aligned with the taxonomy, and then demands investors to disclose the percentage of the funds that they are taxonomy aligned, whether on revenues based on the revenues of the company's revenues alignment or on capex alignment. This basically creates the first ever common measurement tool. That allows, as I was saying, compare apples to apples. And this is really important because for the very first time, it allows clients to decide if they want to invest in green, which portfolio, they prefer to invest. The other point I was going to make, really important, is around the importance of the taxonomy to help create portfolios, What do we mean by that? I remember when I was at BNP Paribas Asset Management, I don't know if I told you, Sean, but at the very beginning, I started heading the research team for thematic funds. So I was working with Felipe, that you know very well, developing our own taxonomy and investment universe for the green funds of BNP Paribas. So I remember how many hours we spent trying to define whether or not semiconductors could be included and under which conditions, And I say about semiconductors because I really struggle with semiconductors, but we struggle with a lot of the different technologies and activities. So the first, a second message to investors that are listening to it is that, hello, all those hours spent on trying to discern whether an activity or a technology is sustainable are gone. You're going to have a Bible, you're going to have this dictionary, called the taxonomy, that's going to tell you whether or not it's sustainable under which circumstances, and it's going to be updated regularly. So massive. So investors then can start concentrate in what is their job. So once they know what is sustainable, then they can concentrate on picking the stocks that are more suitable for the different environmental objectives and investment strategies of their portfolio. So an incredible tool to help, construct those portfolios. May I add a couple of other points? It's also really useful and in particular for creating or helping to create portfolios that are aimed to target or to help the transition in particular. And why is that? Because for the first time, a green taxonomy includes transitional activities. What do we mean by transitional activities? Those activities that they're not yet there, right? They're not low carbon or green, for which we don't have yet a technology that helps them reach that, near zero level. However, they what we have done in the tech first and then the platform is identify the best performance for those activities. So this means that investors are going to be able to invest in sectors like cement, like steel, that traditionally have never made it in green funds. Now, the other dimension of the transition that is really important, and we talk about it quite a bit last week. It's the inclusion for the first time also of CapEx. Until now, investors for creating their green portfolios have very much based the decisions on the green revenues, and using their own taxonomies, but on green revenues. Now they have at hand also their CapEx, what is the investments that companies are making to become green or to expand the green activities. And this is really important because that goes into the core of capturing the transition, the efforts companies are. It's also worth saying that companies not only will disclose the CapEx that investors in rendering their assets or activities in green, but also the investment plans behind them. And we're encouraging companies to then explain how it fits in the larger strategy. So basically, investors are going to have at hand, a whole series of variables to play with to develop specific funds for investing in the transition and finance the transition. Very quickly, it's also going to help investors on their engagements with companies. I remember as well, I was very involved on the Climate Action 100 Plus, which is a global initiative, an investor coalition that aims to engage with the 100 biggest polluters in the world. And one of the things that we were asking those companies is for their CapEx to be aligned to the Paris Agreement, but what that means. And we had large discussions on that, and companies started committing, some companies, to do so. But how do you prove it? Well, now you're going to have companies in Europe disclosing their CapEx aligned with the taxonomy, and that can be also your reference point. And I think I'm going to leave it here, but just to say that while it helps decision making at portfolio level, I also encourage investors, particularly asset owners, to use it for asset allocation, because at the end of the day, the taxonomy is a little bit like that shopping list for 250 to reach carbon neutrality at a time where so many asset managers and asset owners have publicly committed to net zero. What best than to use that shopping list that gives you a perfect picture of, how that economy by 2050 should look like.
Thank you. Julia, Helena's made some grand claims there about common language, common ground, and so on. You're in the middle of Allianz Global Investors. This is one of the largest investors in the world. You've got to make this work. Is it actually, does it sound as good as she's saying it is? Is it complicated? What's involved in practice? And also, as someone trying to make it work, what's your general view? Is this useful, or is this actually yet another regulatory burden that we could do without?
So it's definitely useful. We were looking all for a common language. And I think this is what Helena framed in the very first beginning of what she was saying. It defines a common understanding of what we can consider as sustainable. And this is what we were all looking for. So it is useful. It has, but as you pointed out last week, it's a building. It's in the making. So if I refer to your electric car, you know, we are just about to put together the cables in this respect. So we are just in the making. We need to figure out how the dots have to be connected. So there's a lot of challenges, but if it works in the end, we all will be rewarded. We will all have, you know, this common understanding, this clear definition, this clear disclosure on what is sustainable and what is not. And maybe if we take a look on where we are going. So I think the best way for investors is basically to take that as a journey. So we have to start. It will not be perfect in the beginning. There are lots of bits and pieces we will need to figure out, and we are figuring out also actually with both of your help in terms of heading the usability group of the Sustainable Investment Platform. So in this respect, this is something which is, of course, on the move, evolving, and also since regulation is not yet finished in all respects, it's also something which we need to figure out on a day-by-day basis. But if we work, I think if we work together, there will be a great, you know, end result. I would like to add something to Helena's point, because you were asking what does it mean for investors, and she made some very, you know, good points in framing all of this. But of course, it's also a question of what type of investor you're looking at. So we do have different types of investors. We have retail investors, we have institutional investors, and even on the institutional investor side, there are different focuses, different places. And we as an asset manager in the middle of all of it have to steer basically all the different demands. And especially if I take a look on the retail versus institutional side, the institutional investors that are very close to the taxonomy regulation, very close to the taxonomy, they do have, of course, a different level of understanding and different needs and demands than a retail investor for whom, you know, he might not be interested in so many details in the end, but, you know, to have a clear common understanding of what the product is he getting, that will also help on the retail side, definitely.
And we have the SECO label proposal coming through, which is a separate regulation, which will reference the taxonomy in terms of guidance, which will cover retail products. You mentioned something earlier, Helena, about the need to differentiate between investors and specific funds, and I think specific products. Can you talk a little bit more about what you meant there, what you think the issue is?
Yes. So when it comes, I said at the very beginning that the only obligations linked to, like legal obligation linked to the taxonomy is one of reporting, yeah? But we need to distinguish what it is the reporting obligations at entity level, yeah? And that means all those companies, financial or non-financial, that they are under the scope of the CSRD, which is the new non-financial reporting directive, yes? So what we're going to find is that there are some asset managers or even asset that are listed. There are also many asset managers that are part of a larger group, which is the case for Julia, that in turn has to disclose under the CSRD, yeah, the new non-financial reporting directive. So that's what I meant by we need to distinguish that type of reporting, which is for the geeks that are listening to us, you know, it's the Article 8 of the taxonomy regulation, from the fund level regulation, which is under Article 5 and 6. But basically, if we go back to normal language, we say that only when it comes to funds, it's only for those funds that investors commercialize as having an environmental objective or environmental characteristics that they need to report. And maybe it's the moment for showing that one slide that I love, so we explain the audience on how it works at fund level, and because I think that's the most interesting part, and I'm happy to then talk about entity level if you can you.
What, we want that slide up?
Yeah,
Sure.
if you can show the slide. Yes,
Sure,
perfect.
sure. Let me find it for you. But just what's the definition of a small fund again? Just tell me. What's the cutoff in the regulation?
So from
500 people?
No, so from no, it used to be 500 people, yeah, for Article 8. So that means for entity level, it is for all those companies that have to report under the new CSRD, which basically are those companies who have more than 250 employees. And then there's, I'm sorry, Sean, I don't recall from the top of my head, but it has to be one of the other two variables. One is around profits and the other one around revenues. I don't know if, Julia, you recall. I think it's 43 million and something else, yeah?
Yeah, something like that. Yeah.
Exactly. For those who are listening who come from Sweden or Spain, for example, it's already the case, because when those countries transpose the non-financial reporting directive, already lowered, the bar. So now everyone is going to be the same within Europe. The other thing really interesting for the audience to know is that, as opposed to before, now private companies are also going to have to report not only against the taxonomy, but against, of course, the non-financial reporting directive. And the same goes for listed SMEs. Yeah,
okay.
Only listed.
Two questions. First, I'm sorry, I just need a clarification on acronyms.
Sure.
You mentioned a few. You mentioned non-financial reporting, CSFRD. Now, for those of you listeners on, we've heard about non-financial reporting directive, NFRD. We might have heard of sustainable financial reporting directive. CSRD is?
No. So NFRD was the non-financial reporting directive. Sorry, it's because things are changing by the minute. So right. Even I, get confused with the acronym. So it's NFRD is non-financial reporting directive. It has been very recently, I think it was in April, it was replaced by the CSRD, which is Corporate Sustainability Reporting Directive. Yeah.
Okay. So and that's the acronym we should worry about.
Exactly. And that's the one who has enlarged the scope from listed large companies, where the bar was at 500 employees. It has expanded it to include private large companies, lowered it to 250 employees, and included listed SMEs and non-EU companies listed within Europe.
Whoa. Okay.
Maybe, Helena, it's worth mentioning. Yes. Sorry.
Please.
Maybe
go ahead, Julia.
It's worth mentioning that this is not yet in place. It has not yet been replaced, but it's just in the making. So, but this is a very important step also for investors, because that is where it's all coming down to. We need the data from the companies. We need the information from the companies, and the more companies are required under the CSRD, sorry, there's also a CSDR, but it refers to other things. So under the CSRD going forward, this one is going to be very important, because the more data we get from that one, the better it is, because otherwise it's going to be difficult for the investor side to really make the assessment.
Absolutely. And so the link, just to make sure that everyone understands, because I realize that it gets confusing, it's that the taxonomy regulation refers to this directive in order to determine the scope of which companies have to disclose against the taxonomy. But of course, the CSRD will include many other indicators. And as Julia said, it's in the making, yeah?
Okay, now, so for everyone listening, the reference that Julia made earlier to electric vehicles is a reference to a conversation Helen and I were saying last week. This is like building an electric vehicle. We are in the middle of construction, but of course, when it's finished, we should be able to just get in, press the button and drive off. That's what we're aiming to do here. But right now we are still bolting cables to cables and figuring out a plan. We will later on this year provide more written instruction, or rather guidance, to the market around matters like this. We may have to have an acronym buster. There'll be more, but this gives you a bit of a flavour of the things that are in play. Now, one other thing I want to tease out, Julia, when we spoke on Friday, you mentioned that despite this being limited to investors over 250, et cetera, you think it'll have a flow-on effect across the whole financial community anyway. Can you just talk a little bit about what you mean by that and what you think the impact is?
Yeah, the 500, 251 is the disclosure on the company level we were talking about and Helena was talking about. But the way you have to look at it from an asset manager or financial market participants point of view, also including insurers or even banks that provide portfolio management, if they offer a product, and Helena mentioned that before, that has environmental or social characteristics or that has sustainable investments as objectives, then they also need to disclose in these products the share of taxonomy alignment, if there is one. And therefore, this is important for all of these investors. They're going to need the taxonomy. They're going to need, if they want to offer a sustainable product, they're going to need the data around the taxonomy. And when you ask me, well, is it of relevance for everyone? I think, of course, because everyone wants to offer a sustainable product. You want to have, as an asset manager or as an insurer, you want to have the possibility to offer your clients a solution which is sustainable. And therefore, this is going to be of huge relevance for everyone.
That's a critical point for everyone to understand. Thank you, Julia. I want to get to some brass tacks, as we say in English now, the difficult stuff. So, Julia, you've been supervising a project to look at the implementation of this in AGI or being involved in that. Tell us a little bit more about what you found and some clues, some helpful hints for our listeners about how to make this work.
Well, as I said before, we are in the beginning, we have to disclose for our products maybe beginning of the year, maybe later. This is still something we don't know yet, the taxonomy share. So therefore, we need the data. So what we are looking at the moment is how can we get the data? How can we get on board? But also data providers that offer, the specific, to provide us with the taxonomy data. They only have limited taxonomy data at the moment because also the companies, and that is coming back to the Article 8 disclosure, only have to start really disclosing under the taxonomy regulation from next year on. And therefore, we have some kind of time gap we need to figure out. So that's one thing, if you're looking for challenges. The other thing is, of course, that we are looking at European companies. And we are looking at companies of a specific size and looking at companies. So we do have, of course, investments throughout the world. So this is something where we still need to figure out how can we get the data, which we need? Can we report on it? Can we classify it as taxonomy aligned if it isn't falling under the official NFRD or CSRD regime? Is it possible to disclose that in a way? And I think, it's very important, not only from the investor side, but it's also important from the whole sustainable finance project side, because we have a chance here in Europe. We have the chance, through the financial market, not only to look at Europe in a limited way, but also to, approach investors, investee companies throughout the world and discuss with them, engage with them based on the taxonomy. But we will only have that incentive to do so if the investments in those are also recognized as taxonomy aligned. So I think this is another challenge which we are going through and where we are going, need to work on how we can identify this. So of course there is some debate around that, because how can you ensure that a company that is disclosing voluntarily according to the taxonomy, that it's true to what it's saying? And this is something where we need to figure out the best way to deal with that. But I think, you know, from an investor's point of view and from the whole sustainable finance project point of view, it would be good if we look at the broad picture, if we picture the whole world. And maybe one other thing in this respect, if we look at private markets, again, the lower threshold of the CSRD might not always help. So again, here, I know that our portfolio managers use the taxonomy as a tool. They analyze everything and they reach out to the investee companies on the private market side and ask them for their data on that. But again, if that is not recognized, because it's no official reporting, it's going to be maybe not as incentivized as we could go. I'm sure I have to contribute to that one as well.
Very useful. Helena, do you want to dive in? And of course, I haven't given you a chance to talk to the slide we've got up too.
Yes, just on the I'm going to make a comment on the non-EU large companies. Yes, I think that, or let me take it one step backwards and say, I think there are 3 sticking points today on the table around disclosures. Yeah, and those are for entity level and probably for fund level. We still don't know because we still haven't seen the details of how Article 5 and 6 should look like, because the Commission has not yet. Well, actually, it is the supervisory authorities that have to publish their advice to the Commission, and then the Commission will publish a draft. But leaving technicities to aside, 3 sticking points in my view. The first one, non-EU large companies, as Julia was mentioning, yeah? And here is where what we know today is that at entity level, they have been excluded in the proposal from the European Commission, yeah? Now, we think, and by we, I'm talking about the platform, that is a huge mistake not to include non-EU levels. At the most, we could argue that they could be included voluntarily and maybe postpone the disclosures, you know, the mandatory disclosures on that at the most, yeah. But it is a huge mistake because, number one, then what is the ratio of any large financial institutions if you exclude, you know, outside of Europe? That ratio will never tell you, tell you nothing about the real investments or financings of that institution. Secondly, if they're not mandatory, if you don't have to disclose them, why will banks or any other financial institution, spend time in asking or trying to get the information from those companies if they don't have to report and they can continue using whatever they feel like? So you take away not only the incentives for the financial institutions to ask non-EU companies for the information, but also you take the incentives of the non-EU large companies to disclose the information because, why will you if they're not going to do anything with it, right? I think that creates a perverse incentives. It can have huge consequences, a big mistake. But while, as said, I could understand a postponement of those disclosures if we have to accept them, what it will be a total disaster will be to exclude or postpone the disclosures under Article 5 and 6, that is at fund level, because that literally will kill the taxonomy. I recall everyone that the inclusion of company level disclosures was one that it was done at the very last minute during the negotiations of the taxonomy regulation, only to help investors disclose at fund level. So the whole point was to help investors and said, okay, you're not going to have, companies within Europe, and we're going to enlarge it as much as possible. We'll provide you exactly the information that you need. So you can just take the revenues percentage or the CapEx percentage, do the weighting in your portfolio, and there you go. Yeah, very easy. Okay, and then was left the question mark, what happens with non-EU companies? That's what Julia was referring to. And what we are saying, and now I refer once again to the platform, is saying, look, those companies, large companies all around the world, are providing information. It's not the exact information that we need. It might not be complete, but they are increasingly providing information. And between the investors and the army, as I call the army of analysts, that work for data providers and consultants and so on, that they're doing an amazing work in trying to get more information in order to estimate taxonomy alignment. Yeah. So while asking, as long as non-EU companies are included in funds and hopefully in financial institutions, then there is a clear incentive, not only, I said, from the investors, but for a whole ecosystem to really improve data availability. Yeah? What we said also, the platform, is that we understand regulators' concerns about greenwashing if you can estimate it, yeah? But this is why, number one, we're working very closely with the data providers to start trying to distill what could be the best methodologies. We're proposing to develop a set of mandatory criteria for those methodologies. And then when an investor discloses that part of the fund alignment that has estimated, that actually it discloses what methodology it has used, what data provider, and a series of information. So it gives solidity to the estimations, let alone that today the entire market, ESG and green financial, is based on this, yeah? So I think that for non-EU large companies, the message is really strong. They need to be included. The second point was on financial undertakings.
But just to be clear, EU law covers EU entities, so it's not mandatory that they do it outside of Europe,
no.
But except insofar as European entities will be asking for information because someone asked that question, just to be clear.
Oh, to be very clear, what we're talking about to include, it's on European financial institutions, disclosures that can include non-EU companies, and at fund level for EU investors that can disclose, that can estimate the alignment, because neither one will have the underlying information directly from the companies, exactly like they will have for EU companies, unless, of course, some companies, and we invite any non-EU company to try, and to start reporting against the taxonomy. So
now, Helena, you used the word many times in that little stretch, which needs a bit of unpacking. You estimate. You talked about estimate. Now, we've had a couple of questions in the chat. Are we allowed to use estimations for disclosure purposes? And then one that's related to that, by the way, is will disclosures be public so people can interrogate those? Maybe Julia, actually. Can you have a shot? Are we allowed to use estimates?
Well, again, something still in the making. Yeah,
right.
As Helena pointed out, we don't have the final words on all of this. So as an investor, when we are looking at sustainable funds, which we were talking about before, we don't have the final rules around that. We would, of course, love to use some estimates, at least in the beginning. And this is something which I think would be helpful also, to give some flexibility there, because I also want to challenge Helena around her saying we shouldn't postpone the disclosure on the fund level. I think we have to look at the big picture of going together here. So it will be likely, or we have on the table, that the retail investor side have to ask about their sustainability preferences. So this is defined in three ways, and I will only focus on one point, and that's actually the question of how much taxonomy alignment would you like to have in your fund. So in order to answer to that, there needs, of course, to be some disclosure on the taxonomy side on a product level, because otherwise, you don't know how much taxonomy is in in the fund, how taxonomy aligned activities are in the fund. So in order to have that, it would be, of course, good to, in the beginning, use at least estimates, use, data from which we can get from data providers, which of course need to have some verification, because we are all against greenwashing in the meaning that we don't have a clear picture of what we are talking about. So it needs to be clear that data needs to be, somehow verified. But in order to be able to show a certain percentage of taxonomy alignment in your fund, you in the beginning need to have some estimates, because if the companies only start disclosing beginning of next year, and even not the taxonomy alignment, but only first and foremost probably the taxonomy eligibility, which is basically how much of your activities could potentially be taxonomy aligned, then it's going to be difficult on the product side to really, find a sensible share of taxonomy alignment. Therefore, I think it would be helpful, to be able to use some estimates in this respect, because otherwise then the suitability question, at least as far as it goes to the taxonomy alignment, will have, no result. And if we are calculating at the moment how much taxonomy alignment might we be able to show based on the information we get from data providers, we are talking about very low one-digit numbers. So in this respect, we know this is going forward, of course, to change, and that is also relating to what I said in the beginning. It's a process, and we need to understand it as a process. Yeah. So, Helena.
I just have a point of clarification, because as you were speaking, Julia, I realized that maybe I was not clear when I said that I didn't agree on postponing the reporting on EU companies, and that means postponing the possibility to use estimates for that part of the funds, or financial institutions. That's exactly what I meant, because I fully agree what you said. It is impossible to do without estimates, but as I was trying to argue before, it's the using of estimates and the whole machinery and that goes behind with it that helps to improve data availability. And to respond to your question, Sean, of what we're talking about estimates. What we're talking about estimates is, for example, is when you look at do no significant harm on biodiversity, right? And it asks you quite specific questions and you haven't found the exact information, then can you use the fact that the company has a biodiversity policy that covers some of those issues, That's an estimate when you haven't, prove all the single details of the do no significant harm, but you have done your due diligence on it, and you have, it is also about, for example, certain criteria that might ask around water that you might not find, but you have some information on how the company manages, the water impacts, for example, Just to make it clear that on the estimates, we're not envisioning to allow to include estimates on substantial contribution. That is, if the carbon intensity level is at 100 grams of kilowatt for power generation, then the company needs to meet that, And then when you will use the estimates, it's around the meeting the criteria for do no significant harm and minimum safeguards, for which, it is much more difficult to find the information. So that's, grossly speaking, what we're talking about at estimates. You're muted, Sean.
The classic mistake of webinars nowadays. Helena, will these reports be able to be interrogated by other organizations, or will it just go to the regulator, or how's this going to work?
You asked actually a very important question before, if it's going to be public.
That's what I'm getting at.
Exactly. It's going to be public. And the reassurance that we know, so we don't know yet in terms of the Article 5 and 6, so at fund level, But what is clear is that at entity level, they will have to go through the same level of reassurance and verification that the non-financial statements under now in the future the corporate sustainability reporting directive demands, yeah, and that is very much decided at national level by the national, supervisors. For example, here in Spain, it has to be verified by a third party, yeah. Sean, I was wondering if we can go back to the famous slide, because we keep going down and we keep missing what I think it is probably one of the key messages that we want to share with everyone, which is
I'll get it up as you're talking.
Yeah, take one a step backwards. And I think Julia made a really important point, which is this is all about providing clarity to investors, yeah, particularly end investors. And so what do we mean by it? Yeah, what we aim with those disclosures when we talk about taxonomy alignment and percentage and all that? What we want to be able to tell all clients is to say, for every euro that you invest in this fund, this is how many cents they're going to be invested in green, yeah? But we go farther than that. We want to tell people to say, actually, 10 cents are going into biodiversity, 20 into recycling purposes, 30 into, mitigation, yeah? Tackling climate change. So to be able to tell them exactly where their money is going to. For many investors, having the breakdown on the different environmental objectives is really important, because they tend to develop a specific thematic funds for a specific environmental purposes, yeah, for water, circular economy, etc. But we also want everyone, all the investors, the end investors, to know, as said, where the money is going. But we also understand that there's a difference in saying your money is going into green or saying your money is going into transitioning, right? And that's why also the breakdown on transitional activities is important. Now, in the example here on the slide, we said that for every euro that you invest in this supposed fund, 60 cents are going into green, yeah? Now, what happens with the other 40 cents, right? Where are those 40 cents going to? And this is why it's very important that investors understand that there needs to be some what we call additional disclosures in order to provide full transparency on the products. And here is where two concepts are very important. The first one is what we call what is in scope in terms of asset classes and what is not. This is the other 40 cents, for example, they could be going into cash, derivatives, or sovereign debt. So these are asset classes that they are not included in the, for the time being, in the disclosures. That means for which the taxonomy cannot be applied, at least for the time being. One of the things that are for debate in the future is whether or not the taxonomy will be applied to derivatives, and then in how and which type of derivatives, and the same for sovereign debt. The other point is that, as we know, and I think that I've seen a few questions in the chat, there's the question of what happens with activities that are not included in the taxonomy, but they are not at all harmful. So this is why it's also very important to disclose the eligibility percentage of the fund. That means, and by eligibility, we mean the activities for which there is technical criteria. So we also have a clear indication of what's the maximum percentage of alignment that the fund can be. So let's imagine, with this example, we say 60 cents go into green, 20 cents are also eligible, but they're not green yet, and the other 20 cents go into, cash and derivatives. And that's what the disclosures on Article 5 and 6 should look like, and hopefully would look like. And
can I compliment?
Yes.
Can I compliment? Because we don't, on the fund level, it's also important to bear in mind that we do have the disclosure regulation, which also tackles, to some extent, what's in the rest of the fund. You need to be a little bit more transparent there and provide information. For example, is there any sustainable investment, which is actually something which is a broader understanding of sustainable investments, also a positive contribution to a sustainability objective, but not as, closely defined as in the taxonomy. So all the things that are not yet defined by the taxonomy regulation, all the things that do only have a positive contribution, but not a substantial contribution as is required by the taxonomy regulation, all these can be considered sustainable investments and will have to be disclosed on a product level if we are talking about a sustainable product. So again, if an environmental activity is not yet covered there, it could potentially be a sustainable investment and would be disclosed to investors due to the disclosure regulation.
That's absolutely right, and it links to maybe the work that the platform is doing. It's worth maybe recalling that we are working on making a proposal to the European Commission of expanding the taxonomy to cover social objectives and potentially also significant harmful activities, which basically means those activities that actually do harm significantly the environment. Yeah, and if we do so, then there is a question mark again for the advanced students in the audience, which will really linked to the principal adverse impacts disclosures of the disclosures regulation, the CSRD. Yeah, and we believe on the platform we put forward a proposal saying if we do have eventually a significant harms activities, that should be the indicator for capturing significant harmful in the disclosures regulation as well. So
folks, you'll see on the screen at the moment the dates for the relevant. Tune in for the significantly harmful 2-hour presentation about proposals to date, where they're going to on the 30th of July. And for those of you that ask questions about a social taxonomy, do tune in on the 12th of July for a lot more detail about that. These are substantial new presentations arising from the work of the EU platform. But of course, the really important point that was made was you can say 30% aligned to X, 20% aligned to Y, and 10% aligned to Z in terms of your allocation to different aspects of the taxonomy. That's a critical usability factor. I just want to go to a entire different approach here and see if Julia and Anna can help one of the people asking a question. How does this apply to things like PE funds, investing in unlisted or even derivatives? What do you do? Maybe Julia, you should kick us off.
Yeah, happy to do so. So of course, if you have a sustainable fund, you take a close look on what's going to happen on the investment side, and you have to divide it somehow between asset classes. On the private equity side, you might be more able to get information from your investee company in this respect, and you can do it with questionnaires and so on and so forth. And this comes back to the tag that I was mentioning before. It might be the case that you are not allowed in the end to show that as taxonomy aligned because it doesn't fit a company that is required under the non-financial reporting directive or CSRD to report mandatorily. So this is something where we also need to look at on the private market side. Goes to private equity fund, but also to infrastructure investments, infrastructure debt, and so on. Very important parts that are very relevant, I think, also for us to get it to a more sustainable future. If we talk about target funds, it's becoming even more difficult because you can imagine if you have a European target fund, so if we are talking about fund of fund, we have private equity fund of fund investment. Then, of course, if you have a European fund, it will fall under the same regulatory regime, the same reporting requirements. But if you go outside of the EU, again, you will have to liaise with your management company and everything that helps us, to incentivize people also outside Europe to follow this regime. Also, the work on the international taxonomy and everything around that, I think you mentioned that in your last webinar, will be of huge importance. Now, on the derivative side, it's also a challenge because we can as of today, we can say we do have some derivatives which can be considered sustainable, but not a lot. And we think that the market will evolve over time there as well. Like indices, for example, you can use some, index investments in this respect. But you need to look at this carefully, of course. You need to have as an investor, you need to have a very good understanding on what type of investment you're looking at, for what are you going to need the derivative, because that's something where you need also to disclose, do you need it for hedging purposes, for example. And I think that's something which is of huge importance and which should remain possible even in a sustainable fund. So.
Okay, so there's a lot of elaboration that's going to happen. The key point that Helena said right at the beginning, a common language at last. We have a variety of approaches being taken across organizations, across fund managers, across banks, about what you can call sustainable or green or variations on the term. Comparing is like crazy complicated. Now, we do have some industry initiatives. The International Capital Markets Association, some of you will be aware, has got very high level guidance for the green bond principles, but we're talking about fitting on a page here. The International Standards Organization has got a work group looking at taxonomies and so on. There's a variety of the Climate Bonds Initiative, which I come from, has been looking at taxonomies for the last 9 years. We've published one. But of course, in Europe, there's a difference. This is a regulation we're talking about. This changes the terms of debate. All the voluntary things are still useful and of course have fed in to the process of doing a taxonomy, but the taxonomy is the trump card, the ace card, because it will be a form of European regulation governing investors as well as corporations and banks in Europe. So this issue about how we fit into other taxonomies, to be honest, folks, other taxonomies are going to have to fit in with the European approach. Does that sound right to you, Helena? Have I spoken out of turn?
Well, I would add 2 comments from a truly different angle. So the first one is that, as opposed to in other areas where internationally we tend to go, through the minimum common denominator, when it comes to the taxonomy and ESG disclosure standards, what people need to understand is that even if internationally a lower or less strict taxonomy is put in place, that in Europe for European investments, it would remain the EU taxonomy, which basically means that if you are an institution, financial institution, you are a company, European company, then it's in your best interest, you would already meet, the highest standard. If your question was more was more geared towards how can we create a high level of international standard, in terms of the taxonomy and where you can, I think that we need to do 2 things. So first of all is to distill what it's really important to share, what all taxonomies should have, what is that common ground that all taxonomies have to have. And the second point is how can we make the EU taxonomy a little bit more internationally friendly, And I think we need both. On the first one, and please jump in, Julia or Sean, I think that what is needed is first to share the skeleton. And by the skeleton, I mean that number one, it has to be, and the principles, science-based. It has to have, environmental objectives, and we need to distinguish those environmental objectives that are internationally could be considered the same, if we're based on science, like on climate mitigation, versus some environmental objectives that might be very localized, like around water or biodiversity. Well, it really depends on the local context. Secondly, we need to share the same environmental and financial metrics, at least that the pieces on which we construct the taxonomy are the same. I also think that it's really important that all taxonomies share the view of the European taxonomy of it's not only about contributing substantially to one environmental objective, but not harming the others. This double conditionality is absolutely crucial. And then, if possible, cannot we just share some of the key thresholds that they are really important, particularly around climate change, like on power generation, some of the, like top criteria that we know is really needed internationally in order to transition. And I wonder what you guys think on that. And then we can go back to how can we make the EU taxonomy more internationally friendly.
Well, I want to pick up this point about plans in a minute too, but I just want to stress, I was referring to voluntary taxonomies. There's a separate work going on amongst governments around the world to develop taxonomies. The Chinese government for the green bond market has had a taxonomy operational since 2015. We are in the middle, Europe with China, in negotiating what we're calling, or what the governor of the People's Bank of China called on a Network for Greening the Financial System webinar a couple 2 weeks ago, a common ground taxonomy, which we published in September, which will combine areas where we have common agreement between the two jurisdictions to provide guidance for the rest of the world, or particular emerging markets that might want to try and access money both in China and in Europe, or to use locally. The Hong Kong government has already announced it will then adopt the common ground taxonomy as guidance for the Hong Kong financial market. For example, Singapore has published, the Monetary Authority of Singapore has published a draft taxonomy. Colombia, Chile, South Africa has one out for consultation, and so on. In fact, the most amazing thing is the extent to which we've now got a global conversation based on the taxonomy work that we've been doing about what counts as sustainable in a way that we haven't before. We have managed to embed this idea it should be science-based. And that is, you look at labeling what's equivalent. This is separate to what incentives you might provide and what support and what official government policy is. It's labeling what is consistent with the Paris Agreement. But of course, in some countries, incentives aren't being brought in. In China, the central bank provides lower cost capital liquidity lending window for green bonds held by banks posted as collateral that meet their taxonomy. Who knows where we will go in Europe? Although it is worth noting that Christine Lagarde, in her remarks to the Parliament last year, did say she felt the taxonomy needed to be the guidance for what the European Central Bank called green in its quantitative easing program. I guess that's something to watch for next year. But the key thing, the key benefit for everyone and for investors is a common language and the ability to be able to compare, putting aside all of those sort of things. And Julia, you've been reasonably forthright in the past about thinking this is useful. Can you tell us a bit more about that? Because everyone out there is saying, this just looks like hard work. This looks difficult. Why do you think this, just tell us a bit more about the benefits you see coming through.
Yeah, I mean, the common language would allow us to have really throughout the world at one point, hopefully, a good understanding of what is sustainable, and would allow the financial market to get their share in changing the world, which is of huge importance. And I think given the fact that there's a lot of political reluctance, not in the EU, but of course outside the EU, depending on which country you take a look at, to shift the industry and so on and so forth. I think the financial market can play and should play a very crucial role. So that's the overall picture. On the specific side, of course, there are also investment opportunities, because if you look at the question of where are we going to be at in 5-10 years, what is going to be the risk side, on the investment, but where are also the opportunities? Where can I see that a company is evolving in a way that allows it to really contribute to a changing environment, and maybe give also a return to investors on that one. And I'm in this aspect, I'm also talking about financial return. So I think there are a couple of things in terms of the common language. Yes, I think every work on a taxonomy, also on a local taxonomy outside the EU, shall be helpful if it provides in the high standards that Helena just said, that would be ideal, of course. But we still have, what did you refer to, the army that will help us to, you know, translate all of this into the EU taxonomy. And we are, you know, we need, of course, analysts. We need analysts that understand how can this translate into the, you know, local taxonomy language. But I think, you know, this, as you indicated, Jean, this is a very complex, ambitious, you know, project we are working on, which means we still should do it. There are very, very good reasons that we should do it. But things where we can, you know, make it less complex by helping us to align on an international standard. Things like that are, of course, helpful from the investor's point of view, but I think also from everybody's point of view.
Yeah. And
we've got to wrap up in a few minutes, Helena. So just to alert you, 5 minutes to go.
Sure. No, just very quickly, just to add to Julia, I couldn't agree more. And that was the second point around, we also need, in Europe, we need to make an effort of making the EU taxonomy more internationally friendly. And some of the proposals that we have put forward are around, you know, all do no significant harm that relates to EU regulation. How can it be translated into international standards, for example? Yeah. And so anything that we can do also to help the application of the taxonomy internationally will be a step forward. I couldn't agree more. Sean, I was wondering if, to conclude, we can go back to, for me, one point that is really important is on the positive note, which is how much the taxonomy, how much can help the taxonomy to create business and to provide new business, you know, investment opportunities, particularly in the debt side, yeah. But
I especially want you to talk about this idea of plans being eligible.
Oh, there you go. I know what you're referring to. So on that, two very quick things from my side. So we were talking at the very beginning that it's not only about revenues, it's also about CapEx, yeah? And CapEx is basically the investments made to either expand an activity or an asset that is already green or to render an activity, yeah? So when it is to render an activity or an asset, so you have one plant, let's say it's power generation, you don't meet the threshold and you want it, you know, you want you're going to renovate your plant and you want it to meet the taxonomy. So what you do is you develop an investment plan that specifies how you're going to do it, you know, and what is your objective in terms of the taxonomy alignment. Generally, it is previewed that or envisioned that the plan doesn't last more than 5 years, but there are exceptions allowed if you properly justify it. And then what that means is that all the investment made, all the expenditures in, you know, rendering that plant taxonomy aligned so that they are part of the investment plan can count as taxonomy aligned. So when you go to the bank and you ask for a loan, it can be called green loan and it can be 100% taxonomy aligned as long as all the investments go into, you know, our relate to your investment plan. And that's the beauty of the taxonomy. So, and that's what I was saying, that the possibilities within the debt market are enormous because it's loans and it's on bonds in use of proceeds, because you can be a 0% aligned, taxonomy aligned company from a revenue perspective, but you can be 100% aligned from a CapEx perspective, and you can become therefore extraordinarily attractive for investors. And at the same time, and that's the whole purpose, is that because investors and financial institutions will want to have, we want their percentage of alignment to increase and to be the highest possible, then of course they're going to have a preference for those debt products or equity products that have a higher. And at the end of the day, what we're hoping is that translates in a lower cost of capital. which is the whole purpose.
Julia, this is a significant advance on, say, the green bonds market and so on, isn't it? Is this feasible? I mean, how hard will this be to do for a fund manager like you to look at plans?
Well, as long as we have the disclosure, which is, transparent and lays out the plan and where we can tackle this, as long as we have all of this, I think it's of course completely feasible, at least for large asset managers like us. For the smaller ones, it might be more difficult, but we also have the green bond standard going forward, right? So, if we have issued green bonds that are compliant with the standard, it might be, more easy for smaller asset managers to identify sustainable investments that are captured in green bonds.
And for those of you that aren't aware, the green bond standard draft was actually leaked to the media a couple of weeks ago. There are some articles around it. What we do know is that we will soon be commenting on a consultation draft. I think I'm right, Helena, on that issue, but it references the taxonomy. So there are some provisions of the green bond standard, which is expected to be a voluntary standard, not a mandatory standard. To qualify under the green bond standard, you will need to, do what we're talking about today. This is a pretty major thing. We've got a lot of questions which we haven't been able to answer. We will attempt to try and pick some of these up in the coming week, responding by email to people as much as we can. We're now at the end of time. We need to finish up at past. There have been a couple of interesting questions which we haven't addressed about link to ESG. I think it's best to say this is a different framework, but of course links to ESG, picks up the E in particular, picks up the social, subject to what you think about joining us for the webinar on the 12th of July. And there are governance issues implicit in what we say. So it links that, but it's not necessarily exactly the same framework. This is made up of a science-based criteria about what should apply as distinct from risk-based criteria. So in that sense, there's a slightly different framework, even though it has the same roots in terms of our thinking. Julia, is that a reasonable thing to say?
It is a reasonable thing to say, but of course, there are discussions around how much can I use the taxonomy also to identify, let's say, ESG risks in the mid and long term. And especially if we are looking, at the significantly harmful taxonomy, that might be an interesting one. So I built the bridge here for the next webinars, you see.
Thank you so much for that. I appreciate that. So last remarks in terms of where do you think this is going next? Julia, for you, from an investor, you've talked about things in flux. Are there particular points that you want to make sure get implemented in the final stages of the taxonomy development?
Well, all the points I've made before, that we show and that we look at the broad picture, that we look at the timeline, that we understand it as a process, also from the investor's point of view. I think it's very important for all investors that are on the call. It isn't like we are going to finish by the end of the year. This will be something which will go on and will require work over the next few years, but the end result can be fantastic.
Helena, last word.
Last word. I just want to finish by highlighting a point Julia made around the inclusion of ESG preferences, because I want to share with everyone to what extent this one piece of policy or this policy measure has been passed and noticed, but how important it is. It means that investors will have to ask all their clients, including, retail clients, each one of us, if we want to make when we want to make our investments in the bank, they will ask us about our own preferences. Yeah. So basically means that we can align for the very first time, we're going to be able to have the right to choose where we put our money, and we can invest our money also in financing the transitions, and we can decide in which funds and how green they are. So I think that that's something that cannot go unnoticed. It is for the first time we're going to have the right to choose, as we have when we go to the supermarket. We can choose what type of products. So really important.
Nicely put. Thank you. Thank you everyone for joining us on this webinar today. Tell your friends about other webinars, which are showing on the screen now. It'll be this time of day for the next few weeks. We have a lot of work to do, as you've heard, but things on the other hand have advanced hugely over the last 3 years. We're in the last stretch of trying to get it right for the beginning of the taxonomy. Note though, that the European Platform on Sustainable Finance, of which we're all members, will continue to operate, continue to advise the Commission on sustainable finance activities and development of the platform. It is a dynamic tool. It will change, but of course, we're trying to make sure it's easy for investors. The rules will be forward changing, not backward changing, etc. There will be further discussion about this going forward. Thank you so much, though, Julia Bachmann from Allianz Global Investors and Helena Vienes Fiestas, who is now at CNMV in Spain, for joining us and has, of course, been leading all the work with Nadia Humphreys on the usability and data work group of the EU platform. It's a big job, but geez, it's exciting. It's exciting. Who would have thought that rules around the finance sector could be the source of such extraordinary debate? But it is. It's because our future depends on this. Because what we are trying to do, as Helena said at the beginning, is to craft a shopping list for the future and to prepare that for everyone to be able to use with a common language. We'll all be able to use that, even those who are thinking about our own retirement funds or maybe shopping at the supermarket. Helena, you never know, to be able to guide us in how to take this forward. That's the prize we're after here. Watch this space. I hope to see you next week. This webinar will be available as a recording on climatebonds.net/webinar or on YouTube. And of course, all the other webinars will also be available as recordings. Please spread the word, share the message, and good luck in creating a sustainable future for our children. Thank you, everyone.
Thank you.
Thank you. Thanks.